Investing can seem complicated when you're first getting started. There are thousands of stocks to choose from, endless financial terms to learn, and no shortage of opinions about the best way to build wealth. That's exactly why ETFs have become one of the most popular investment tools in the world. Instead of trying to pick individual winners, ETFs allow investors to buy a collection of assets in a single investment, making diversification simpler and often more affordable. Today we will talk about ETF investing explained in 10 minutes. So before we get started, make sure to hit that like button, also subscribe to my channel. 10. Understanding what an ETF actually is. Many people hear the term ETF and immediately assume that investing in it is complicated or only meant for financial experts. The reality is much simpler. ETF stands for Exchange Traded Fund, which is a type of investment that combines many different assets into a single investment that can be bought and sold on a stock exchange just like an individual stock. Instead of buying shares of one company and depending entirely on its success, an ETF can give you ownership in a collection of hundreds or even thousands of companies, bonds, commodities, or other assets. 9. How ETFs work behind the scenes. An ETF works by collecting money from thousands or even millions of investors and using that money to purchase a basket of assets based on a specific investment strategy. Some ETFs follow a major stock market index, while others focus on certain industries, countries, company sizes, or types of investments. When you buy a share of an ETF, you are purchasing a small piece of everything inside that fund. 8. The power of diversification. One of the biggest reasons investors choose ETFs is diversification. In investing, diversification means spreading your money across multiple investments instead of putting everything into one place. If you invest all of your money in a single company, and that company performs poorly, your entire investment could suffer. However, when your money is spread across many companies or assets, the poor performance of one investment can potentially be balanced by the stronger performance of others. 7. Different types of ETFs. Not all ETFs are the same, and understanding the different types can help investors choose options that match their goals. Stock ETFs invest in companies and are commonly used by people looking for long-term growth. Bond ETFs focus on government or corporate debt and are often chosen by investors seeking income or lower volatility. Sector ETFs focus on specific industries such as technology, healthcare, or energy, while international ETFs provide exposure to companies outside your home country. There are also commodity ETFs that track assets like gold or other resources. Each type has its own risks and opportunities, which is why investors should understand what an ETF owns before investing their money. 6. The advantages of ETF investing. ETFs have become extremely popular because they offer several advantages compared to many other investment choices. They provide instant diversification, are usually easy to buy and sell, and many have relatively low management fees compared with actively managed funds. They also offer transparency because investors can usually see what assets the ETF holds. Another major advantage is accessibility. Many brokers allow investors to start with small amounts of money, making ETFs available to beginners who are just beginning their investing journey. This combination of simplicity, flexibility, and affordability has helped make ETFs a powerful tool for long-term investors. 5. Understanding the risks. Although ETFs are often considered beginner-friendly, they are not completely risk-free. The value of an ETF can rise and fall depending on the performance of the assets inside it and the overall conditions of the financial markets. A stock ETF can lose value during a market downturn, and a sector ETF can perform poorly if that particular industry faces challenges. Some specialized ETFs may also carry higher risks because they focus on smaller areas of the market. Before investing, it is important to understand that all investments involve uncertainty. and investors should choose ETFs that match their financial goals, time horizon, and ability to handle market fluctuations. 4. How to choose the right ETF. Choosing an ETF requires more than simply selecting one that has performed well in the past. Smart investors examine factors such as the ETF's investment objective, the assets it holds, management costs, historical performance, and how the ETF fits into their overall investment strategy. A younger investor with a long time horizon may focus more on growth-oriented ETFs, while someone closer to retirement may prioritize stability or income. The best ETF is not necessarily the one with the highest recent returns, but the one that aligns with your personal financial goals and investment plan. 3. The importance of long-term investing. Many new investors become too focused on daily market movements and short-term news. They check prices constantly and become nervous whenever the market declines. However, successful investing usually requires patience. Long-term investors understand that markets naturally experience periods of growth and decline. Instead of reacting emotionally to every change, they focus on staying invested and allowing their investments time to grow. Because ETFs can provide broad exposure to markets, they are often used as long-term investments that benefit from years or even decades of economic growth and compounding. 2. How to build wealth with ETFs. Building wealth with ETFs is usually not about making one perfect investment decision. It is about creating a consistent system. Many successful investors regularly invest money into ETFs through monthly contributions, allowing their portfolios to grow gradually over time. This approach reduces the pressure of trying to predict the perfect moment to invest and encourages discipline. Combining regular investments with long-term patience can potentially lead to significant growth. The amount you start with matters less than your ability to remain consistent and continue investing through different market conditions. 1. Why ETFs are a powerful tool for everyday investors. The greatest advantage of ETFs is that they have made investing easier and more accessible than ever before. In the past, building a diversified portfolio often required large amounts of money and extensive research into individual companies. Today, a single ETF can provide exposure to hundreds or even thousands of investments around the world. While ETFs are not a guaranteed way to become wealthy, they provide a simple and efficient method for participating in financial markets. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.